Well, good morning, everybody. Thanks for tuning in to this week's broker update. This week, unfortunately, Mike had some business over at the board dealing with the merger between Pro and GTAR. So it's just going to be Byron and I leading the way. We're going to do a continuation of what we did last week with, what can we expect in 2025 and how can we help you get your business in line in order to be prosperous next year. I always start with you definitely want to grab your calendar and start filling in the white spaces on there. As Mike was saying, white spaces. If you have a lot of white space in your calendar, you're not doing any business. So make sure you fill in those white spaces with daily, weekly tasks that need to get handled. And I also wanted to mention, obviously I speak to a lot of agents that we have on a daily basis, and I talk to a lot of the high producing agents as well as agents just getting into the business. And, I wanted to share with you some of the strategies and some of the best practices that a lot of the high producing agents are doing or consistently doing in order to keep their business at a steady incline or at least leveling, but never dipping as far as production or gross commissions and stuff like that. And, I can tell you a lot of it is not mind-blowing stuff.
Mm-hmm.
A lot of it is just sticking with the basics of what we learned when we first got in the business and just being consistent at it. And I'll tell you, consistency is probably the number one trait that they say you have to do. You got to stay consistent with whatever you're doing. Whether it's posting on social media or it's going and sending out your mailers, doing text messages, phone calls, circle prospecting, or door knocking. Whatever you're doing, just be consistent at it, because that's what's going to set you up, planting the seeds for years down the road of effective business coming back to you. And then strengthening relationships with your past clients. And I understand a lot of people they close the deal and then they kind of just ghost their clients after that.
Yeah, no, can't do that.
And you really can't do that. This business is a relationship business first. People, if they know you, or you got to get them to know you, you got to get them to like you, and when they like you, they'll trust you. And so when you have those three, you're going to be able to continue reaping the rewards of that business. So strengthen those relationships. And I've always been a Buffini fan. And Brian Buffini, if you don't know who he is one of the largest real estate coaches out there. He's got a huge team now. I don't even think Brian does coaching anymore. He has a team of people that do it. But their system of keeping it personal, doing the phone calls, doing the note cards, and doing the Popeyes is really key to the business and recouping business from your past clients. So strengthening those relationships. And one of the first things that I've always learned is, you take your database of past clients, friends, family, and organize them to the A+, the A's, and the B's. And so, when you talk about A+ clients, what would an A+ client look like to you, Byron?
A+ client, see, and what you're trying to talk about, I'm like thinking someone that might be, closer to purchasing or selling a new home. Maybe is that that order?
I would say my A+ client or my person in my database that's an A+ is somebody who I connect with regularly.
Yeah, okay.
That has past business to me in the past.
Yeah, okay.
Maybe they've purchased or sold something with me in the past, but that's not always a guarantee. But it's that person who is always advocating for you.
Mm-hmm.
They're your friend, or they're your past client,
your hairdresser.
Exactly, your barber, your hairdresser, your dentist, you're somebody you're doing business with all the time that knows you and trusts you and likes you and is the advocate for you. The person that's going to talk to other people and say, "Oh, you need a realtor? You need to go talk to Byron," or "Here's Byron's information." So, and that's the A+ clients are the ones you're going to always want to take care of. You should be connecting with them at least weekly, if not, or at a very minimum monthly, but I would say weekly. And always doing the Popeyes with them, giving them items of value, things along those lines. And then of course you have your A A clients, and those be advocates as well. More than likely, they're the ones who you don't touch base with on a weekly basis. Maybe it's more of a monthly or quarterly thing, but they've passed you clients in the past. They're an advocate for you. They want to see you do well.
Mhm.
And that's the name of the game is you help them, they help you, and then of course your B clients. Those are the ones who maybe once again maybe you've sold them something in the past, maybe they've purchased from you in the past, but there's still somebody who advocates for you. You just want to take care of these people and touch base with them on a very regular basis, so that way they can pass leads to you, because those are going to be the best leads that you're ever going to get. Are the ones who have come from somebody that they know and trust, and then they're sending them to somebody that they know and trust as well.
And to touch base with these people, it's not hard to touch base with these people. You can do multiple different things, whether you use a CRM and you have something that's automated that you can set up at the beginning. If you do it at the beginning, you're a new agent, you only have 1 or 2 people you're putting in that section. So
Right.
It's easy to keep up with. Now, if you haven't started a CRM and you've been in the business like Bernardo has since, I don't know, 1850, something around there, Bernardo? So
Agent 007.
Yeah, Agent 007. But you have
Keep calling me old now.
So you could have hundreds and past clients, over the many years. If you haven't started a CRM, it's going to take you a while to get that done. But, do something like 2 or 3 people a day, and then go on into your other, things for the day. But setting reminders on your phone, you have your calendar. The first thing he started talking about was fill your calendar. If you have to fill your calendar with reminders to call these people that are A+ clients,
Right.
then that's what you do. So you got to keep it up. So just put it all together.
And that's what it is. This time of the year is normally the planning time to plant the seeds for next year and the many years to come. So, once again, doing the calendaring, fill out that calendar. If you don't have your database set up, you don't need to have a CRM. You can go in it with, an Excel spreadsheet for, if you don't have that. But, a CRM will help you stay a little bit more organized. It helps set up those reminders. And, Stellar MLS, they offer, I think it's called Prospects.
Yep.
Prospect CRM. It comes to you included in your Stellar MLS fee. And it's a pretty robust CRM. So, load your contacts into there, and then you can keep track of it. But like I personally like a actual paper calendar so I can write everything out. But yeah, this is the time of year you want to start to plant those seeds.
And at Integrity right now, we have 2025 paper calendars.
You sure do. I saw them.
So
give Byron a call.
They're nice to have one. We got plenty of them. We order a couple hundred every year. They go. Usually, I probably have 5 left by the end of January as people start snagging them. They really like them. They're a little bit smaller than paper size, but big enough that you can write everything down, take a look at it. I used to like the back when I was doing real estate accounting in Denver. I had the 3 the bigger calendars, but I had them on my cubicle 1, 2, 3.
Mm-hmm.
So I would always swap them each month, so I always could see 3 months ahead. So I was always planning because we had ownership that owned the buildings, commercial buildings downtown, and they were setting up meetings for based on whatever their end of the year was, whether it's September end of the year or if it's the calendar year.
Sure.
So we had to be prepared for those different ones.
Right. Yeah. So just grab a calendar, get organized, get your database organized, and it's all about follow up. The third strategy that top producing agents speaking with them is getting out of their comfort zone and producing quality, not even quality, but just content on social media, because that's going to be your number one way in today's world to get people to know you. And, then after that, you put out the quality content to get people to like you and to trust you. And so, I know Mike had shied away from it for a long time, but I'll tell you, he's really embraced it over the past little while here. He started a new Instagram account and I think a new Facebook page. He's been putting out some really great content. And,
you just have to do it.
You just got to do it. You got to stay consistent with it. And I think that's, the most, in my opinion, the most important thing is to stay consistent. So
on that yesterday, we had our Canva workshop. Now, reminder for everybody that was there. I know Stephen was there earlier, but get out of your comfort zone. Come to Canva if you want to make your own flyers, do some stuff. Candace from CMG and myself are there to help through the workshop. So if you're a beginner, we'll help you through as a beginner. If you're advanced, we're going to try and get you more advanced. So there's all sorts of the videos that you might want to do. You want to green screen it. You want to learn how to take backgrounds out. This kind of stuff that, yesterday it steered more towards the kind of beginner side, trying to get some things done, overlapping things. Canva is very powerful tool. Myself with knowledge of iMovie and some of the other video programs to help you cut videos. If you bring in a video and you have an idea of what you want to do during Canva, after the first little while, we can do that after the class. It depends on how the class goes, but that's why we have Candace and I there to really help you guys get through that. But the comfort zone part, is showing up to class. Show up to class. Let's get through it. So don't wait on it, because you're going to want to do it. And like you said, be consistent. Yeah. So if you get in there consistently, we can learn another step every single time. And then you'll be on your own, and you can just do it every day on your own. If you need to call me, for a little pointer on how to do this, I can't find this, feel free to call me. I'm happy to help at all the time.
And Canva's a great tool. I mean, there's a lot of free things that come with Canva. Is Magic Write on the free side of things, or?
The Magic Write is not. The other thing that's not free on the Canva thing, which is a little annoying, is the resizing. So you almost have to duplicate work, but you don't at the same time. Because if I'm doing an Instagram, as I was explaining to the class yesterday, Instagram is set as a square. Right. All the TVs, monitors we have are all widescreen.
Sure.
So that's typically a Facebook post or whatever. So you have to make sure, if you're doing one thing for Facebook, make sure whatever's going on Instagram is in that center square.
Right.
Or do it as an Instagram post, and then it's a little more universal, although you lose the size.
Sure.
So it all depends on how you want to do your stuff. So, and you're talking about your calendar, filling your calendar, right? Canva also can log in to your Instagram and Facebook, and it can set a scheduler to put out stuff on your calendar for Facebook or Instagram too. I think there's more that it can add on, probably Pinterest and stuff like that would be my guess.
So you can create in Canva and then automatically have it scheduled to post. So while you're doing your planning in November and December, you can create the stuff and schedule for maybe the first 3 months of the year. So that way it's done, set up, ready to go.
Yep.
And then, it's just about getting consistent, maybe marking on your calendar that, hey, in January, I need to set up the next 3 months for March, April, May.
Right.
Very cool.
And it doesn't matter if you're at an open house and you took a picture of this beautiful for sale home. It doesn't matter if you post it 2 months from now. Nobody knows about the house, but they might start asking questions. Oh, you could say that one's not available anymore. What can I help you find?
Sure.
So.
No, that's important, definitely. All right, so moving on to, the other one thing I just want to touch base and talk about with, some of the high producing agents is designations. I always find it interesting to talk with agents and find out what designations they may have or may not have, or why they don't have it and whatnot. And I can tell you there's 4 designations that I've put together after talking with the 10 different high producers that I was speaking with, and they all have the ABR, so the accredited buyer representation, which is essentially accreditation or a focus on representing buyers. And so, advocating for buyers. The next designation would be the SRS, which is the seller representative specialist. So again, you're on this listing side of things. Some of the agents that I talked to, they said, it's really, they get the question from clients, what does the SRS mean? And it does have an impact when they're able to express to them how they are going to help them sell their home, just because they've had this extra added training from the SRS. And then if you wanted to sharpen your negotiation skills, the RENE, which is the real estate negotiation expert. Again, dealing with buyers and even with sellers as well. But I hear it more on the buy side when they talk to agents or talk to their clients, and they're letting them know, hey, I've gone through this negotiating course. I've been in the business for a long time, and I have this designation that was pretty tough to get. So that's why you want to use me as your agent. And then the last one is the PSA, which is the pricing strategy advisor. It really helps you dial in on how to perform a proper CMA and get the right pricing for the property. So you're not just, most agents, well, hopefully most agents are doing a CMA of some sort, and they still just kind of get a ballpark on where that property should be priced. And then you go on the market and you say, well, if we get a lot of offers, all right, well, that means we priced it a little bit too low, so we should be able to build it up. If we're not getting any offers, then we've overpriced it. But if you do that, then it's days on market start to creep up, and we don't want that. So having that designation for the PSA has been proven to be very valuable to these agents.
Well, the SRS and the PSA should probably be
go hand in
taken.
hand.
Yeah, they should probably be taken together. If you find them in the
100%.
same week, take them, get them done.
Yeah, definitely. And the ABR, I know I talked about it already. That one is still being offered free. The course itself is being offered free through NAR. So if you go to nar.realtor, you can find that ABR course on there. They're offering it free. I believe that there's an application fee you have to pay, and then of course a reoccurring every year that you'd have to do to keep it up. But the actual initial course is free.
So the ABR is kind of like your license.
Very similar.
You need to do some sort of continuing education to keep up with it.
Yep, because as we know, the markets are always
changing,
constantly changing. So after talking with these high producing agents, I kind of wanted to go into some reporting that I found. NAR does some really great reports every year, and this one that I'm going to go over talks about what does the buyer and seller look like in today's world. It's been surprising to see after, and I'm sure you'll be surprised after I go over some of these numbers, but they pick 167,000 home buyers, primary residence home buyers from July 2023 to July 2024, and they send out a 127 question survey to these purchasers. And then they get back roughly around 1% of the respondents. 1%. So you only get back
out of 100,000.
Out of 100,000, they get 5,400 responses. Kind of sad, but it does give you a pretty decent outlook on what type of buyer is out there. They saw the lowest amount of first-time home buyers. Only 24% of the primary residence buyers in that year were first-time home buyers. So that means almost 85%, 76% were repeat buyers.
That'd be fun to see year over the last 3 years with the way the interest rate changed to see how it went up and down.
Well, it was 32% the previous year.
Oh, okay.
So it's gone down to 24% first-time home buyers. And they say that is based upon interest rates. It's a lot. It takes a lot more for a first-time home buyer to afford a home today. So I find that interesting in the fact that, if you're an agent and you're trying to figure out what's my niche, or what am I going to start to target? What type of buyer am I looking for? Well, only 24% of the market was first-time home buyers. So then you should be going after the repeat buyers, because that's going to be your biggest market share there. The average age of a first-time home buyer was 38 years old.
Really?
Yeah. And that was up from the previous year, which was 35. So
that's national average.
That is a national number. But the typical repeat buyer increased to 61 years old. So, you're kind of getting those boomers. I don't know my generations, but 61 years old. That was your highest repeat buyer, and what that seller or what they were purchasing. The reason why they were moving was they were looking for a better quality of neighborhood, and they were trying to be closer to friends and family. So,
not a second home.
Not a second home. They were selling their primary, or they were purchasing a primary in a new area.
My mind was thinking snowbird a little bit.
Yeah.
Repeat buyer. I'm now 60. I've had a home for 25 years. All right, let me go buy a house in Florida.
Sure. Not the case.
And we got 18 people right here that can sell a house.
That's right.
We're buying a house from.
And here's one thing that I found very interesting. 86% of buyers used an agent, and most of them only interviewed one agent before making a decision of what agent they're going to use.
So make a lasting impact.
Yeah. Provide your quality. What are you going to bring to the table to help that buyer?
You're going to bring an ADR.
Yeah. You have your real estate negotiation expert designation and your ABR. FSBOs accounted for only 6% of the sales.
Wow.
That is pretty impactful there. So that means 94% of those homes were sold using an agent. So
that's a lot.
That is. Yeah. And so you're close to, well, you're over 90% of people who are using realtors, which is phenomenal.
That means get your name out there.
Yeah. And let's see, as far as what does a seller look like? The most commonly cited reason for a seller to sell was to move closer to family and friends. 66% of them used an agent that was referred to them, or it was an agent they used in the past. So then again, building those relationships with your past clients, staying top of mind, using your CRM to connect with these people.
When you were up in DC, did you ever? I'm guessing you had at least one, a client that used you to sell their house, but then they went off and used somebody else to purchase, something of that nature, or vice versa. They bought, and then they decided to use somebody else to sell.
Nope.
Never happened?
Never happened.
Never? But if it happened, it'd probably stink.
Oh, yeah. 100%.
So keep your touching them weekly.
That's right.
Keep your A+ clients and keep it together.
Yeah. No, I've,
I would think that
thankfully, I've always been able to keep in touch with my clients, and or I've, for me, I always had them on some type of email drip. I had them on. I was touching them monthly with a postcard. I was touching them quarterly with a nice magazine, and of course, phone calls and just general pop-bys. So it always worked out for me, anyways.
In that DC area, popping by was not so easy because of traffic.
Yeah, traffic ain't great. But the good thing about it, that community, well, not necessarily community, just area, is very transient. So you have a lot of military and government who are coming in and out every couple of years.
Yeah.
But when you've done a great job for somebody, they become your advocate. And so they know somebody else that's coming in to take their job, and they're passing your information on. So it's very important.
A+ client.
Those are your perfect A+ clients. So those are the ones you want to take care of. And so definitely build your lists in order to deal with them. So that's it for my statistics on those. I did want to mention to everybody, I know that when Stellar did one of the changes with removing fields and whatnot, they did add a field where when you put in the listing, you say you are, it asks you what type of representative you are for the seller, whether you're a single agent, a no brokerage, or a transaction broker. Make sure you're always marking it as a transaction broker. We're starting to see quite a few where people are putting in single agents, even though they're using a transaction broker listing agreement. Please remember, we are always a transaction broker here at Charles Rettenberg, so make sure you put that in there. And now I wanted to pick Bernardo's brain, if you can. I know he's on here someplace. Just kind of give a little update on what are you seeing in the insurance side of things? Or buyers and sellers playing well, or are they getting paid out and still selling their homes? What's going on with it?
Good morning, guys. So the last couple of weeks, I have been getting more and more calls of people that are getting a little bit frustrated with the wait. I think the adjusters are coming out to everyone's properties pretty quickly, but then it's taken a while for them to process the claims and come up with a payout and so on. It is unfortunate that's kind of going to be the trend for a while. I mean, they're not trying to jerk us around. I don't think. I think it's just really there's so many claims and there's only so many adjusters able to process them. Haven't really had much problems with the ones that were processed all the way through as far as payments are concerned. I think the ones that were getting a lot of negative feedback were the claims that were basically filed with the wrong company. So basically, you had a flood claim and you filed a claim with your homeowner's company. They're not going to pay it. So then it's frustrating that some people went through that process without checking with their agent, and then ended up wasting maybe 2-3 weeks of the process waiting for an answer from the wrong company. From a premium standpoint, I think we're probably going to be looking at more increases here in the next 12 to 24 months. There's a lot of changes with the citizens assumption, policy assumption, basically private companies going in and cherry picking policies out of citizens. Most of the companies that are doing the assumption now are pretty established, but there are 3 or 4 of them that are fairly new. So anytime you get if you get a call from a client with that question, or if your own policy is about to get assumed by a different company from Citizens, it's a good idea to kind of look them up, maybe call your agent, ask their opinion about it, just to make sure that you're not getting sent over to. Sometimes you have multiple options, and just make sure you're selecting the option that's going to be best for you.
Right.
I'm starting to deal with some people that are actually selling halfway through the claims process. That becomes really, really touchy, because sometimes you have an open claim, no payment. If the prospective buyer is buying with a mortgage, and therefore we need insurance, that can get really, really complicated on the buyer side for getting coverage with an open claim. If the sales cash and the buyers, they don't really need coverage. If it's something that is, it has extensive damage and so on, not as critical. But if they're trying to get a mortgage and they're going to need insurance, that's something to look up for it. At the time of negotiating the contract, making sure that everyone is up to speed on how long it can take to get the claim processed, the payout done, the claim, getting closed, and then getting the new coverage.
Because
have you
the
guys had
buyer,
any issues?
because the seller needs to close out that claim in order to be paid prior to the closing of the property, right?
Correct, because usually when you're getting a policy for a property, one of the questions or one of the steps on the process of getting that is making sure that there's no open claims on the property, right? So a lot of times what happens is, even though it's a claim that is a third party did it, there's still an active open claim, and that can make it difficult, if not impossible, sometimes to get coverage.
Gotcha. Okay, makes sense. So, what do you? Are you seeing a lot of homes out there that obviously have gotten flood damage? The seller's just kind of walking away, and the buyers that want to pick them up, they have to be cash, right? Because you're not going to be able to finance and essentially get insurance on it. Is that correct?
Correct. Unless you get hard money, but still hard money is probably going to require some kind of insurance on it. I'm dealing with one right now in Snell Isles. We're purchasing purchasing a home that is really a lot at this point.
Okay.
The seller has given up on it in a way. I think the 50-50 rule is going to cut really close on that one. Very likely that we won't be able to fix the property. So we're buying with the idea of knocking it down and then rebuilding something there, elevating and all the good stuff.
Right.
Which kind of brings an interesting point to a lot of the agents that will be helping people buy those properties. There's a lot of ins and outs on what can you build, how big, how high, and so on. So that's something to research, as a real estate agent,
Sure.
so you can better inform your clients, and basically not let them to think that they can build something, massive on a fairly small lot, which is usually what people are trying to do, is buying the cheapest lot they can and put as much square footage on it as possible.
Right. Yeah. And so, I think it's really important for agents to, um, an agent should be well versed in obviously the 50-50 rule, and what needs to get done. But also, when you're working with a buyer that's interested in picking up one of these properties, you should really encourage them to do their research. You don't necessarily need to do the research for them as the agent, but make sure they're aware, and give them that extra, try to get them that extra time during the inspection period or whatever, so they can reach out to the municipalities and find out, hey, am I going to be able to build what they want to build on this property before they close on it? Because once they close and they're not happy, it's not going to be a good thing for everybody.
Well, as real estate agents, it's kind of important to delegate the liability to the right person,
Yeah.
right? So, like in this particular case, I'm not an structural engineer. I'm not an architect. I'm not, I don't work for the city building department. But it's important for me to know what direction to point them, and point them to the people they need to talk to, so they have all the right answers. And obviously, it helps if you know what the basic criteria are, so you're not showing them a lot that may only fit 3,000 square feet of a home when they're trying to build something that is 4 or 5 or 6,000. So knowing the setbacks, the basic heights, prior to these storms wasn't that relevant because we, in Pinellas County at least, or in most of Hillsborough, you're not really dealing with building something. But now that we're going to be dealing with that a lot, it's nice for you to be diverse, into all those at least basic criteria that someone needs to know in order to build something,
Right.
in Pinellas.
Bernardo, can you explain in a brief way, because there are a few new people that are on the Zoom, explain what the 50-50 rule is, just as like a basic understanding.
All right. So in a nutshell is the biggest misconception before we get into it is it has nothing to do with the size of the house. It has to do with cost to rebuild. So a lot of people used to say, "Oh, I'm going to tear down half of the house and then I can build on to it, and the 50% rule wouldn't apply." That's urban legend. Basically, there's no such a thing. So imagine if you bought, if you have a one-story home that is 1,500 square feet and you got 4 feet of water in it, right? The cost to replace that property, as established by the property appraiser's office, may be, let's say, $200,000. Your cost to rebuild that property cannot exceed $100,000. Otherwise, the 50% rule, it's triggered. And if that's triggered, then you don't get a permit to rebuild or to repair. You're going to have to tear it down or bring it up to code, right? Which on the flood zone, bringing it up to code is either impossible or cost prohibitive, right? If you have a one-story slab home, block construction, raising that 5, 6, 7 feet up in the air, it's not going to be cheap,
Right.
and sometimes not even possible. So the 50% rule is basically, if the cost of if the value of the structure, not from a real estate value, excluding the land, it's $200,000, and your repair is 125, you have exceeded that 50%, and therefore now you have to update windows, elevation, wiring, and so on, which most of the time is going to trigger, a tear down, being the best way to go about it.
How would that affect the people that are on like limited incomes that have, bought the house, 50 years ago, but now it's worth, a lot more, but they don't have a mortgage payment, they don't have anything. Would that almost end up kicking them out of the house if that was triggered?
I mean, if you think of someone that has the maximum amount of flood insurance, which would be 250,000, right? And they live in a home, like you said, for many years, don't have a mortgage. Now with this loss, they're hopefully going to get paid the entire amount from the insurance company, right? And then hopefully they can get enough money for the lot itself or for the damaged home that combined in the two numbers would allow them to purchase something else somewhere else. But the unfortunate part is it's not up to them at that point if they want to stay there and rebuild. If the 50% rule kicks in, that freedom of choosing, it's taken away from them, and they're obligated to bring the house up to code or tear it down. So it's going to be impactful to people like that. And then I think worse than that, it would be people that bought in the last 12 to 24 months that now have a damaged home that they may not be able to rebuild. They have a mortgage, hopefully, that is below what the payout and land cost would be. But if it's not, you may end up with no home, still having a mortgage, and it's going to be pretty bad for quite a few people out there.
Right. And that's probably, and people in those instances will likely have to do a short sale or, something along those lines.
Yeah. Now, before I forget, and this is kind of out of the subject, but I did some research on the exemption for property taxes because of the damage. And through the process, if you look into the application, it's going to ask you how many days were you out of the home. And I have seen a lot of people filing that request with the property appraiser's office, but they still don't know how many days they're going to be out. So it's way too soon to be filing for that exemption today, unless you're already back in the home. Do you guys know do you know what I'm talking about?
Yes.
Okay.
I mean, feel free to explain it. So,
so basically, home flooded in September, and let's say you were out of the house for 90 days. the Pinellas County property appraisers are going to allow you to get a refund of 90 days worth of taxes for the time that you weren't occupying the home. If you're filing it today and your home's still being rebuilt, or you're still going through the claims process, or you're just not in the home yet, you may be filing and saying, I'm out of the home, for 90 days or 60 or whatever. And then next thing you know, the process gets dragged on for 5 or 6 or 7 months. And then now you basically apply for the wrong amount of time, and therefore will get the wrong amount of refund. So it would probably be advisable not to forget about it, obviously, but to try to file that once you're back in the home, or try to delay it as far as the beginning of the year. I think the cutoff date is the same as filing for homestead, which is end of February or 1st of March, to make it more confusing for everyone.
No, that's yeah. Go ahead. No, that's good to know. And I assume that's Pinellas, Hillsborough.
Yeah, as far as I know, it's
all the
statewide, but
statewide.
obviously only for the counties that got really affected by the storms. But yeah, it should be all the counties that they had some damage.
Gotcha.
Go ahead, Kelly.
Good morning. My question is, can you clarify, as I think I've heard conflicting information about this, that if someone gets the $250,000 from FEMA, but they can't, they're still, I guess I'm not sure how to even ask the question, but from what you just said, it sounds like the seller can take that money and possibly buy a new house with it. But I was wondering if that money needed to stay on with that property, that if someone were to buy that then they would get that $250,000 to make the repairs to the property.
Normally it wouldn't, because the policy and the payout, it's to whoever purchased that particular coverage, right?
Mm-hmm.
So if they get the cash, they're most likely not going to sell the house for full market value unless they use the cash to fix it. So normally the way it works is the seller has the ability to keep the insurance payout and then choose to either use it to fix the home and sell it for a higher price, or just keep the money and say, you know what, I'm going to sell the lot or whatever structure is left. And then it's up to the buyer to come up with a number that justifies the condition of the property. If it's something that gets, it's able to be fixed, basically.
Okay, thank you.
Then I think Valentina was asking, to get the tax credit, do they need to submit an appraisal?
It's not a tax credit. It's a property tax refund. So they do not. It's basically, you have to document how many days you were out of the property, and the reason why you were out of the property. And that may be, showing some pictures, maybe showing the insurance claim. But it's really a refund on your property taxes. So you're as of on November 20th, a lot of our property taxes have already been paid by our lenders, out of escrow. So what's going to happen is next year you're going to get a check from Pinellas County, basically saying, here's your 3 months, 2 months, 6 months, whatever amount of days you were out of the property. And it's really just to help us try to mitigate some of the losses we had.
Right. And I mean, the property appraisers and obviously the state of Florida is trying to do, what they can to help, sellers and owners at this point in time. And I know Pinellas County, as agents, if we want to find out what the 50/50 amount is for that particular property, you can go to the Pinellas County property appraiser site, and they'll actually formulate a letter right then and there that shows you what the value of the whole, or what the market value is, and then of course what the repair limit would be. Right. Are you seeing that in the other property appraisers as well, Bernardo? Or is
I think most counties are trying to get that implemented. Pinellas County is really super easy to get to, and pretty simple, really. Now, I wish we had the appraiser here with us, because some people are disagreeing with those amounts. And then that's when getting an appraiser to step in and help with the process, will come handy.
So if they disagree with what's on the property appraiser, and they do hire let's say they hire John Barcelo to do the private appraisal, do they go back to the property appraiser at that time and negotiate, if you will?
I think it would be a combination in between going back to the property appraisers, to the township or city or county that the property is in, depending if it's incorporated or not. And then FEMA will probably have to be involved in this as well.
Right.
The biggest problem with the cities not applying those rules correctly is they could lose the ability to get flood insurance. So, like my property in Indian Rocks, if they start going around giving permits to everyone without, really being compliant with FEMA's rules, the city of Indian Rocks could lose the ability to have flood insurance or to participate on the National Flood Insurance Program. So
Right.
it's not really the county or the city or whatever that they're trying to make it difficult for us. It's just they're trying to stay as compliant as possible so they don't create a bigger problem for us as citizens, because they allowed us to rebuild something that FEMA would think should be torn down or brought up to code.
Sure.
So I guess to answer your question is the appraiser is probably going to have to get with the property appraisers, with the city or the county, and then FEMA may have some say on it as well.
Gotcha. No, that makes sense. I think Valentina had a follow-up. So I looked at the form and they asked for an appraisal for myself. So the tax credit, you can just go online for Pinellas. As far as I know, yeah, Valentina, you just go online and do the refund that fill out the form online, like Bernardo was saying. All right, good stuff. So anything else going on out there in the insurance world, Bernardo?
Nothing fun.
Nothing fun. Oh, gotcha. Well, I can tell you, from the calls that I get, how people are handling it is, if the seller's just walking away, they're doing a short sale. So, if you're out there and you have that seller who just wants to walk away, they still have a mortgage on it. They collected their insurance check. They're not going to be doing any, or they can't afford to do the repairs. So they're going to find a new home. We've got them hooked up with CMG Mortgage, who has been able. They have a FHA, or what is that? The FHA 203H loan. It's different from the 203K loan, and then they're doing a short sale on the property they're selling. So that's not 50% of the calls that I get, but I would say maybe 10 to 20% of the calls I'm getting is that's how they're reacting. Sellers are reacting to what's going on right now. So hopefully with the insurance and whatnot, they'll be able to get things done.
And with the short sale environment coming back again, I mean, you remember back in 08, 09, 10, real estate agents trying to help people process a short sale. You got to keep in mind there's legal liabilities, there is income tax liabilities. So you want to make sure that you're bringing in, those two other aspects into it, and the right professionals.
Yes.
So you don't take on all that liability by yourself as a real estate agent, giving people tax advice and everything else that comes with it.
Yeah, 100%, Bernardo. I mean, as agents, we're hired to market and sell a home.
Right.
Leave the short sale negotiating to the attorney, to the professional, to the title company. I know that Integrity is not a short sale negotiator, but I'm sure they work with an attorney that is a short sale negotiator, and they can still close the deal for you. But definitely, we want to reduce that liability on us as agents as much as possible. But it is a good idea for you to get some knowledge behind yourself when it comes to how the short sale process is going to work. There are short sale addendums and riders that go along with the contract. So, pull those up. They're in Form Simplicity, transaction desk, pull them up, read them. There's a lot of disclosures. I think the industry itself learned a lot the last time we went through a large short sale market. So there's a lot of disclosures out there, but definitely take the liability off of yourself. Reach out, find an attorney that can handle, or find out a short sale negotiator that can handle the process for you. All right, I guess we'll open it up for any questions if anybody has any. Otherwise, I appreciate everybody being here today. I know next week we have a couple. No, we don't have any classes next week. It's Thanksgiving.
Yeah, Thanksgiving.
And so we will not be here next week, obviously, but the following week, which I believe is the 6th, 5th, maybe the 4th, December 4th, we will be back.
Yep.
And we will have Bernardo back and myself and Mike will be here. And I don't know what we're going to talk about. What do you think? I don't know. We'll think of something.
Probably just. You probably need to talk about a few apps that can help out at the beginning of the year.
Productivity
apps. Productivity apps.
Let's keep that going. So,
Yeah.
and if you have any suggestions that a topic that you all want to talk about, feel free to shoot us an email, and we'll be happy to look into those and start moving forward. I know that as we turn into January, I think this broker update we're going to turn into more of a podcast. So with our own MC Byron here. So definitely look out for that. We'll still have everything on video, and you'll still be able to tune in live, I think. And
hopefully,
we'll go from there. Yeah, as long as you can get it done.
We're trying to figure that out, but yeah, we'll get it all done.
Exactly. All right, guys. Thank you so much for being here. We'll see you next time.
See you guys.